throttle companies, but almost all car batteries are made in China, which gives them a competitive edge in the price of batteries. The real question is whether the Chinese can use their expertise in making cheaper batteries to catch up to Tesla in manufacturing and software. One of Tesla's main strategies for keeping a big share of the EV market is its wide range of appealing vehicles, from the Model S to the Model Y. Each one shows the company's dedication to performance and an unmatched driving experience. The truth is that Tesla's name has become associated with EVs and cutting-edge technology, and the company's ability to create a strong and enticing brand image has been a key factor in attracting a loyal and growing customer base locally. Many stock investors and analysts are still hopeful that Tesla stock will do better than the market. Why have all of these stock analysts stayed positive on Tesla stock despite the tough market conditions? You'll have to keep watching to find out. Steve has a great handle on the data. He's talking about 54% of production coming out of China. This makes me wonder what would happen if you cut back in China as well. For example, shipments from China dropped by almost a third in July. Steve make this global for us for a moment because they don't just produce in China. Yes, it's been a key area of focus, but they produce largely in the US, also in Germany. They're looking to expand. How much are we going to see a curtailment of overall production, or indeed a curtailment in overall profitability globally here? Well, 2 points. One, Tesla loves producing in China because costs there are so low, but you'd be foolish not to be aware of the geopolitical concerns on the horizon, and that's why doubling down on the capacity size, expanding capacity in China, and about to break ground this month with the new plants in Monterrey, Mexico. So Tesla's on school, but they're diversifying. They're going to other markets like Mexico, where they can enjoy the benefits of lower cost vehicles. But I must say, I think Elon, having survived the tough times 5, 6, 8 years ago, where it wasn't even sure the company would survive, it's focused like a laser on making sure he has a cost advantage over the others. I think he's going to squeeze a lot of the new incumbents, and I think what you're going to see very quickly is this big global shakeout again between Tesla, who's sitting on top. The Chinese were coming quickly with very low-cost batteries, and a Volkswagen, which is probably the other Western brand that I think has done the best at modernizing, bringing battery production in-house, and improving manufacturing capabilities. There is a strong culture of innovation at Tesla. The company's desire to break rules and question established beliefs has led to big steps forward in not only electric cars, but also energy storage and renewable solutions. The Cybertruck is on Tesla's plan. As we look into the future, it's clear that Tesla's journey is far from over. Hello everyone, and welcome back to Tesla Hype. Tesla knew from the start that a strong charging infrastructure was key to the success of its electric vehicles. That's why the automaker joined the supercharging network. It was a game changer that made long-distance travel in EVs possible. Tesla's FSD technology includes advanced driver assistance features and the promise of full self-driving in the future. The company's constant updates have shown its dedication to improving and expanding these capabilities. This is what makes Tesla different from other companies, but not many people know this. In the next video, we'll look at how Tesla has become so successful. So let's get ready for an exciting journey through the company's history. Tesla's market dominance has been fueled by its ability to predict industry trends and adapt to shifting consumer tastes. As we look to the future, it's clear that Tesla's role in the electric vehicle market is set to continue its upward trajectory, and the company's dedication to environmentally friendly transportation and technological progress will not waver. In 2021, 6.6 million EVs were bought around the world, up from 3 million the previous year. This shows that there is a rise in demand for electric vehicles, which could mean a huge shift to clean energy. Over the past few decades, demand for EVs has grown tremendously, and now more than ever, more people are buying and using them. Most Tesla bulls think that this rise in demand for EVs will have a positive effect on Tesla car sales and demands. Ross Gerber, CEO of Gerber Kawasaki Wealth and Investment Management, told CNBC that people shouldn't be negative about the idea of electric vehicles because they are quickly becoming the new trend. The switch to electric cars is happening quickly, and many people and countries are starting to see the benefits of using clean energy. For example, Australia has laws that make it easier to buy and use electric cars. More people are thinking about buying electric cars, which is a good thing. According to analysts, the demand for electric cars is rising at a rate that has never been seen before. This is because electric cars are better than ICE cars at promoting clean energy. Tesla has been making electric vehicles, EVs, for a long time. During that time, it has grown its markets and sales by making its technology better and increasing its revenue to meet current and future needs. A rise in the number of electric cars being used. Think about what the future holds for stocks in electric car companies, especially Tesla. A lot of experts are very positive about the future of the electric vehicle, EV market. This is great news for Tesla because it means it will be the biggest electric vehicle company, which gives it a bigger market than other EV companies. People already want electric cars, and they may want even more with the expected rise in demand for its cars. Wall Street analyst Pierre Ferragu once said that Tesla is facing unprecedented demand. He even said that after visiting Tesla's Berlin Gigafactory, a lot of people agree that EV demand is way above what is expected a few years ago, adding that since electric cars have become popular, market shares for Tesla and its competitors may be dictated by their ability to rent production volumes. He believes that if Tesla can successfully meet the rising demands, its stock price can go as high as $530 in the future, and Tesla maybe was $10 trillion by 2030 if it's able to produce 20 billion EVs per year. By that time, coupled with the increasing demand in Tesla cars, the car maker is trying to cut costs, especially with batteries, even though the automaker's already cut its Model I battery costs by up to $3,000 by using large cells. It still intends to cut costs further by using a dry coat process for its 4680 cells. As the leader in electric vehicles for years, Tesla will continue to sell more cars than its competitors while keeping its higher profit margins. If Tesla can ever lower the cost of its batteries, it will be impossible for other car companies to compete with it. Tesla has been able to aggressively invest in research and development, production facilities, and other growth initiatives thanks to its stable finances. This has helped it strengthen its position as a market leader and quickly grow. Tesla's research goes far beyond its headquarters in California. Its global expansion efforts, which include manufacturing facilities in China and Germany, show how committed the company is to capturing international markets. This is how it will eventually completely dominate the industry. What do you think? Let us know below, and if you want to know more about what Tesla's been up to in the last few days, click on this next video. See you there.